payroll accounting, we look at the gross pay, that is calculation of employees' salary in an organization. Many times we pay our workers, both direct and indirect workers, we pay them wages and salaries respectively. So there is need to know how to calculate such salary at the end of the period when services has been rendered by the staff of an organization. Now we'll calculate their gross profit, their gross pay. Many times we know their gross pay in the accounts department. Then we remove the necessary deductions to arrive at their net pay. That is the final pay that they will receive. If you get the gross pay will include the gross salary. There is bonus. If there is overtime, they will be added to it. Then there will be statutory deductions like personal income tax, the personal income tax, like social security contribution, such as employees' pension contribution, national health insurance scheme, national housing fund, benefits like disability, survival benefits, pension benefits, which are mostly given to senior citizens of the country, that is the retired persons in the country. Such money are deducted from their gross pay including voluntary contributions to get to their net pay. Apart from tax that goes to the government of the state, the other contributions are for their future. Apart from tax and probably union dues that are deducted, every other thing is for their future, like pension in case they retire or they leave service, their housing fund, the national housing fund, the insurance fund, and all those things are meant to be deducted and kept for them until they leave service, until they leave the job. Now, that wages and salaries are usually deducted from profit and loss account, which is the final account. They are usually deducted from there as expenses as expenses. And that is why it needs to be calculated on monthly basis. So, payroll accounting can be defined as a record showing the names of employees, the rates of pay per hour worked, the rate of pay per hour worked, bonuses, allowances, gross earning. Then, like I said, statutory deductions. So what I'm saying is that payroll accounting looks at all those statutory deductions, and it is done in a tabular format, which we will look at subsequently. We can prepare our payroll manually or using computer. We will also be looking at the various items that makes up our payroll, particularly in West Africa as a whole. The procedures of preparing our payroll system, whether using a computer or manual. In our part of the country and Ghana, the consolidated salary of an employee may consist of the following. Number one, basic salary. Number two, leave allowance. Number three, responsibility allowance. Number four, transport allowance. Overtime allowance. Risk allowance. Meal subsidy. Utility allowance. And other earned allowance. Now, if you want to prepare your wages and salaries, this is mostly done by the payroll or salary and wages department that keeps the update and maintain files for senior management staff, middle management staff, operational staff, and other categories of staff in an organization. They have files that will give information on scales of salary, allowances, leave allowances, bonuses, and so on, including benefits in kind, like giving accommodation to staff, like buying vehicle for senior management or middle management for use, or buying a pool car that is maintained for staff when they are going out, or assist in transport by buying buses and to pick staff from their respective closest bus stop to the office, and also taking them back home. All those things are benefits in kind. They don't really give money for it, but they supply those services to make this easier for their staff, like many of the banks do. They pick their staff from their homes or closest bus stop to their homes and take them to the office and bring them back in the evening. It is a benefit in kind which they don't pay for. So all this information are included. They are included and quantified. So there are different incentives that are given, most especially when staff involved in what? In overtime allowances. You have different types of schemes. Number one of that scheme is time-based system or rate-based system. When we talk about time-based, we are actually looking at the actual hours worked by an employee multiplied by a fixed rate, a fixed amount or rate that have been determined by management. That have been determined by management. That is to say that there is need to clock in to earn your wages or salaries, as case may be. Clocking in means signing register, either by machine or manually. By machine, you have to clock your machine, the machine, as you are going in, and clock it when you are leaving, so that the hours you worked can be determined and be multiplied by the rate per hour. We have performance-related system. That's number two. Or performance-based remuneration method. Just like the name sounds, it looks at the output of each employee. How much of a product or service did you produce? So they look at the number, the output. That is number of unit produced multiplied by the rate per unit, the determined rate per unit. You have the straight salary. That's number three. Straight salary. Just like the name sounds too, you are paid, or your salary is determined by annual value that is placed on your services. It could be a range. It could be a range that is constant per annum and can be increased subsequently on annually basis. On annually basis. Management will determine that on how to do what? To increase your salary on annually basis. That is to say, if you agreed on 12 million cedis, if you agreed on 12 million cedis per annum, what it means is you divide it by 12, and that will be 1 million per month. 1 million cedis per month. That will be 1 million cedis per month. And every month you will be paid. At the end of the year, your salary is expected to be reviewed upward. That is straight salary. Then we have, apart from these salaries, we have bonuses that are given to staff based on either overtime or good performance. There are schemes that are developed by the company, to reward good staff. We have number one types of bonus is housing premium plan. Housing premium plan. Same Sam, it was, introduced by Arce in 1891. What it does is that it combines the time and piece rate system. Time and piece rate system. The characteristics of housing premium plan is one, workers are paid at a rate per hour for the actual time taken to perform the task. Actual time taken to perform the task. Number three is if a staff takes standard time or more than the standard time to complete his work, he is paid wages for the actual time taken by him at a time rate. By a time rate. Number four characteristics or features is that if a worker takes less than the standard time, he is paid a bonus equal to 50% of the time saved at the time rate fixed. We will look at some illustration to buttress this point. So it means it will take 50% of time saved multiplied by time rate plus time rate multiplied by the actual time taken. What this is saying in essence is as written on the board. You will see it shortly. Asen is saying that if a staff saves time, he will earn a bonus. That is time rate multiplied by time taken. TR, time rate. TK, time taken, plus 50% of time saved multiplied by time rate. By time rate. Multiplied by time rate. So this is bonus. This is bonus. This is bonus. Now let's look at an example. Example 10.1. You are reading. Continue. So what is using this formula for answer, what is time rate? We have agreed that it is 15 CDs times. What is the time taken? This time taken. What time did you use? Time taken.
220 hours.
Beautiful. Brilliant student. 220 hours plus 50% of time saved. That's 50% times time saved. Time saved is that's standard time. Time saved is standard time minus what? Standard time minus what? Minus time taken. Abi?
Yes, sir.
So this one will be standard time minus time taken. That will be time saved. And that standard time is 250 minus 220 multiplied by what? Time rate. Time rate is 15 CD. So 15 CDs times 220. What will be the figure?
450.
Press your calculator. Figure.
450. 450. 450,000. 400. 450.
450.
Yes.
I disagree. Press your calculator. 15. 10 alone is 2,200. 10 alone is 2,200. I disagree.
I won't understand.
It should be around.
250 minus 220 is 30. 30 times
Sorry?
15 is 450.
15 times 220 hours.
Oh,
Press your
I thought
calculator
you
now.
said I thought you said that she might not sit from the time
Each by
taken.
I said times. Multiplication times. Look at the board. Look at what is on the board. 15 times
Your
9
camera is
days.
not on.
Hello?
Your camera is not on. I can't see anything on the board.
Fifteen times 220. That's how much?
3,300.
3,300 cedis.
Yes.
Plus 150 of 250 minus 20. That will be 30. That will be 30. Is 15 times 15 cedis. 15 times 15 is how much? That will be
225.
cedis plus 15 times 15.
225.
225. So if you add it together, you have 3,525 cedis. That will be total salary or the total pay for the above staff. The total pay for the above staff. The next scheme is row 1 scheme. Row 1. ROWAN. This plan is similar to housing incentive plan, but a little bit different. So we are looking at the features. Wages are paid on time basis. Wages are paid on time basis for each actual time worked by the workers. Does it look the same thing like housing? Yes. A standard time is determined for each piece of work or job. It's a bit different, but looks like housing too. Number 3 feature. is that if a worker completes his work in standard time or in more than the standard time, he is paid wages for the time actually taken by him. It looks like asking too. Number next part. If a worker completes his work in less than the standard time, he is entitled to a bonus like asking too. Now the bonus might be the difference. The way we calculate the bonus. For asking, we said it's going to be calculated based on 50%. That's the bonus, 50% of time saved. And time saved, we said it is standard time minus time taken. 50% of time saved times rate. That is for asking. So, number 5, the bonus is calculated as per above. On the board, you will see there. Row 1 equals to time saved over time allowed multiplied by time taken. And multiplied by time taken in bracket. You now multiply whatever you get by time rate. That will give you the bonus. Row 1 bonus. Row 1 bonus. Let's look at an illustration. Using the formula on the board, calculate the bonus that is for row 1 bonus. That is time saved over time allowed multiplied by time taken in bracket multiplied by time rate. Then use the question in asking to calculate the total pay or wages for the above scheme. 5 minutes. Formula, when you are given a formula for, just apply it straight. You have already established that the time savings is 30 hours. The time allowed, which is same thing as standard time, is 250. Then the time taken is 220. The time rate is 15 cedis. When you apply it, you will calculate your bonus and have 396 cedis. If you add it to the standard pay of 3,300, you have 3,696. Very simple, very, very simple. Housing premium plan or scheme is the same thing as Roman scheme. Both of them calculate the wages using the same style. time rate and piece rate, which is the same thing. However, the difference is just in their bonuses, how they calculate their bonuses. Row 1 is time saved over time allowed times time rate multiplied by time over time taken multiplied by time rate. While housing is 50% of time saved multiplied by time rate. And in calculation, you will see that Roman bonus gives the staff more bonus than housing, because it looks at the ratio of time taken, the time saved to time taken. It looks at the ratio. In Ghana, the following deductions are allowed before personal income tax is calculated on the balance. Your 5% pay for social security will be deducted from your gross pay. Employee Provident Fund. Number 3, any percentage contribution towards a special retirement benefit fund will be deducted. Medical insurance will be deducted. All these things are allowed to be deducted before the tax rate is applied. Union senior staff dues or welfare fund are to be deducted. Repayment of employee advances or loans will be deducted before the tax rate is applied. Hire purchase deduction. Other deductions are 1, Roman figure 1. The first 2 deductions, income tax and social security contributions, are compulsory in Ghana. However, the other deductions will depend on the regulation or on the questions or as given in the question or as preferred by the employer. Other deductions again will be children allowance of 2,500 CD per child, subject to maximum of 4 children under the age of 18 and are still in school. Roman figure 3, dependent relative allowance of 2,000 naira each, with maximum of 2 dependents. Maximum of 2 dependents. In Nigeria, Presently, the deduction has changed. It is now 10% of employees' gross pay for contributory pension. Then 2.5% contribution to National Housing Fund. Medical insurance, union dues, cooperative contribution or loan repayment. These are allowable expenses that are applied before and after the calculation of your pay assessment. That brings us to the calculation of pay as you earn and the rate as given.